Housing inventory is at a record low, something with huge implications for the housing market this year. Total housing inventory at the end of March was just over 1 million units. That's down more than 28% from just a year ago. At this point, I even heard someone say that there are now more realtors in the United States than available houses. As I'm sure you're seeing, the result has been skyrocketing home prices, declining home sales, and even more sellers refusing to put their houses on the market. This all sounds pretty bad, right? Contrary to what most other YouTubers are saying, I don't believe this combination of high demand and low supply will result in a housing market crash. I'm going to explain that in just a minute. Before I do, let's take a look at the causes of the inventory shortage, what it means for the 2021 housing market, and how we can expect the crisis to resolve itself. Side note, this is probably the single biggest problem facing the housing market right now. So it's important to understand if you plan to buy or to sell property anytime soon. So what caused this housing shortage to begin with anyway? The current shortage was actually forecasted by Freddie Mac back in 2018 and has gradually developed over decades. I'll come to this in more detail when we discuss the new housing construction in just a moment. First, let's examine some of the more recent events that have contributed to low housing supply, starting with the most obvious, which is, of course, the pandemic. When COVID hit, lockdowns began in March of last year. Many Americans suddenly discovered that their homes weren't suited for 24/7 stay-at-home work. They also discovered that they could work remotely from anywhere, which is new territory. We're not used to this. This resulted in many moving out of major cities and buying up houses in the suburbs. When surveyed about their decision to move, many homeowners claimed they were looking for more space, quieter neighborhoods, home offices, newer kitchen, and access to the outdoors. Given the opportunity to prioritize their quality of life over the demands of their work, Americans did not hesitate to move to more comfortable locations. Data from Zillow's research group confirms this, showing strong growth across small cities and suburbs within an hour of major city centers. The mass migration out of America's cities contributed to the inventory shortage because a lot of buyers did not sell their homes when they moved. Record low mortgage rates and rising home prices meant people could borrow cheap money and buy a second home. They could watch both properties quickly appreciate in value. Let's say if they needed extra cash, they could just refinance their old home. This theory is reflected by data from the Mortgage Bankers Association, which shows the percentage of second home and investor mortgage applications doubled last year. This is creating an artificial shortage called a shadow inventory that could suddenly flood the market if home prices stop going up and these owners quickly sell to lock in their profits. Since these homes are vacant and the owner lives elsewhere, there won't be any additional demand created when they go on the market. This could potentially lead to the opposite situation we have now with supply outstripping demand. Fortunately, Fannie Mae and Freddie Mac are implementing restrictions to stop subsidizing these types of loans. So what does that mean? Going forward, they will limit these types of mortgages to 7% of the dollar amount of the overall purchases. All this information took me a long time to put together, everybody, so I'd really appreciate if you'd hit the like button and support the growth of my channel. What caused mortgage rates to drop during the pandemic? And how did it cause the housing supply to drop? Mortgage rates have been steadily dropping for decades, but in March of 2020, it was starting to become clear just how big of an impact the pandemic was really going to have on the economy. So the Federal Reserve took action to drop them even further by slashing interest rates to near zero. They also announced there would be no forecasted rate hikes through 2023 and dramatically increased their purchase of mortgage-backed securities to more than $2 trillion just in a matter of months. The result was a sharp drop in mortgage rates, which was intentional to encourage more borrower confidence in uncertain times. And boy, did it work. The number of mortgage applications skyrocketed, resulting in the buying frenzy that consumed the existing housing inventory. As anyone with a basic understanding of business can tell you, an increase in demand is great if you can keep producing enough product inventory to meet it. As we're seeing, that was not the case, which brings us to the single biggest contributor to the housing inventory shortage. Are we ready? New home construction. As I mentioned at the beginning of this video, the lack of new home construction is a problem that's been snowballing for decades. In fact, Freddie Mac recently released a report detailing this trend and why it is the single greatest contributor to the low housing inventory that we are seeing today. Specifically, the shortage of housing in the U.S. right now is because builders have been making fewer single-family homes, or as we call them, starter homes. The reason for this is because many of them were spooked by the Great Recession. The accompanying housing crash caused many home builders to lose money or go out of business entirely. Those who survived were traumatized by this experience, and they became very cautious about building new homes. So it's no surprise that when the pandemic hit last year, we saw an immediate dip in the number of new construction starts and permits pulled. Only when builders realized that the sky wasn't falling did new construction pick up again. So if new home construction has picked up since last year, then why is Freddie Mac still claiming it's the single biggest driver to the housing shortage? One word: millennials. There are approximately 72 million millennials in the United States, making them the largest age demographic in the entire country. And those 72 million millennials are reaching their peak first-time home buying age, guess when? Right now. According to the data from the National Association of Home Builders, first-time home buyers account for almost half, 43% specifically, of the new home market in 2021, which is up 32% from 2018. You can see from the data that home ownership rates for 25 to 34-year-olds have been rising in recent years. The thing is, first-time home buyers, they need starter homes. And while construction has dramatically increased in this last year, starter homes only make up a small percentage. According to Freddie Mac, only 65,000 entry-level homes were completed in 2020. But there were 2.38 million first-time home buyers that purchased homes. So there is an increasing demand from millennials for entry-level homes. At the same time, starter home construction is reaching a 5-decade low. This is causing entry-level prices to go up, pushing aspiring homebuyers out of the market and dampening home sales. Millennial demand for starter homes is expected to remain high through the rest of the decade, so it's up to home builders to meet that demand. So now that we have a clear picture of the housing inventory shortage and what its primary causes are, what does that mean for the housing market, not only in 2021, but beyond? Should we expect the housing crash so many YouTubers are predicting? Leave me a comment. Let me know what you think. I really want to hear from you on that. Let's consider some of the things we know. The Fed is going to do its best to keep mortgage rates low through 2023. Demand is expected to remain constant through the end of the decade. And new housing construction has now picked up dramatically. I would say that makes sense, or a strong case of some optimism. There are two things that could still cause an implosion of the market, let's be real. That shadow inventory we discussed earlier, and a wave of foreclosures if the mortgage forbearance programs come to an end. I recently did a video explaining what the Consumer Financial Protection Bureau was doing to prevent these homes from flooding the market. And I discussed the steps of the CFPB that they're planning to take in order to help homeowners who weren't able to make their mortgage payments during the pandemic. One of which involves extending mortgage terms by as much as 40 years. You did not hear that wrong. That's a 4 and a 0. I will continue to release videos on this topic and other important mortgage news each week. So please be sure to subscribe to the channel, share it with a friend, and help me get this good information out there. Click this link to watch this video, and I'll see you there.